This just proves that my strategy actually works, because the one time I went against it, I lost. Yo, what is up? It's Tuesday, November 26th. I am trading ES, and so let me run you down my analysis. On the 1 hour, we are bullish, so therefore we're gonna have a bullish bias going into today. And then, as you can see, there's 15-minute liquidity here. Market just opened. Once we get this liquidity sweep, I'm waiting for reactions. On nasdaq, same thing. 1 hour is bullish. There's a 15-minute low right here. Price swept liquidity already, so now I will be scrolling further into the 5 minutes. Once we get a reaction, then I will look to take a long. Price might want to come down all the way down here and fill this fair value gap or sweep more liquidity. I'm just trying to wait. I'm just trying to see reactions to the upside so I can go long. Alright, so as you can see, price swept liquidity. Now we have a break of structure on the ES, and then we also are about to have a fair value gap. So when price touches this order block, I will go long. Let me see on NQ, same thing. So we got an order block. We might have a fair value gap, and then we will proceed to go long. On the hourly, there's liquidity here and liquidity all the way up there. I do not know. Price is not going to go all the way up there. To be honest, I'm not taking this long because that's the only liquidity. And as you can see, all the liquidity is up there. I don't think price can go all the way up there. We have news coming out at 10, which is in 7 minutes. So I will not be taking this long because news comes out. Alright guys, as you can see, price tapped the fair value gap. Let's just say hypothetically, I like this setup. I would go long here, take profit there, only making 11%. That is not worth it to me. I'll be completely honest. Now, if I had like $1 million and I make 10%, then I'll be Gucci. You feel me? But that is not the case, my boy. I'm not taking this long. Nah, I don't care. It's just bad price action. And we got news. But yeah, right, if there was no news and this was a regular day, I would take a long right there. Boom. I'm gonna come back if we get anything else. If not, then I'll just let nasdaq and ES do what it wants to do, and that's it. It's actually, ES is disrespecting this fair value gap. There's no SMT divergence. Alright, SMT divergence right here. Do we have it on ES? No. And to be honest, this was something new. I have never taken this type of entry or never traded like this. Not trading. If this becomes an inverse fair value gap, I'm trading this, bro. I do not care. Oh, like ES is showing me a inverse fair value gap. So once price develops, then I will look to take a short off that, because we have major liquidity here. We have fair value gap, liquidity, and liquidity. ES gave me inverse fair value gap. So once price taps this inverse fair value gap, I will go short on ES. nasdaq, it's still developing, so let's see how this does. Alright, price tapped the inverse fair value gap. I will be going short. I did catch it right there, I'll be honest. Stop loss would be at that liquidity point. I mean 8%, I mean 7% is good. My first take profit would be 10%. Nah, hell no, bro. 24%. And there's my take profit at this liquidity point. That's one of my take profits. This is my second one, and this is my third one. So if price hits that, then we're solid. We went short at the inverse fair value gap on ES. On nasdaq, we're actually respecting the fair value gap, but this is a SMT divergence right here. As you can see, nasdaq made a higher high, and ES did as well. That is not a SMT divergence, my bad. If we went below it, then it would be, but we have not yet. So let's see if it forms a SMT, and then we'll see what happens. if price breaks structure to the downside on nasdaq, then I was short. News comes out in another hour, so I was wrong about that news, but it should be good. All right, price finally developed the SMT divergence, giving me more confidence in this trade. So right here, made a lower low, or a lower high, my bad. And then on NASDAQ, made a higher high. So we are pretty much set to go. Let's see if yes does what I want it to do. Honestly, my stop loss probably going to be like 5% instead of 7%, but yeah. Alright, as you can see, I got stopped out. I only lost 5%, so I'm not really tripping. And to be honest, this was something new. I have never taken this type of entry or never traded like this. To be honest, I've just been learn new confluences and see how they work out. And as you can see, this time it didn't work out. Maybe in other times it will. But I only lost 5%. I'm not even tripping, bro. I was just trying to try something new. And I think I need to do more evaluating on it and then do it, because I just recently learned this. I like this setup. I would go long here, take profit there. I'll come back if I see another entry. To be honest, there's news, and in 2 days is Thanksgiving. Like the market's just not gonna do anything. I'll be honest. But once that all gets cleared up, bro, we should be money to trade, like real money to trade. You feel me? Alright guys, it is now the next morning, so I'm gonna review what I should have done differently. Instead of trying to try something new, I should have just stuck to what works, and that would have helped me out tremendously. But now let's get into it. As you can see, price broke structure right there before market, actually when market opened, so that was letting me know that we were bullish. Or actually, hold on, that's not even market open, I'm tripping. Alright, yeah, price was bullish on market open. I saw there's an immediate 1 hour fair value gap. So anything in this range, I was looking to take long. When I was bullish, let's go to the 15-minute time frame, see if we have any 15-minute lows in the fair value gap. There's a 15-minute fair value gap as well. So when price tapped into the fair value gap, I wasn't just gonna go long. I would have waited for a 5-minute break of structure, which we got right here. This candle, right? That's a break of structure. Guess what? There's another fair value gap. So therefore, that's where my entry was. Off another fair value gap. My entry was this fair value gap right here. I entered long once the price tapped back into that fair value gap. Stop loss at the lows. And then where is my take profits? I see a 1 hour order block right here. I would have targeted that. I would have done a 0.5 mark of where I entered to the order block. Would have taken profit there. That's 15%. And then my second take profit is 30%. So overall, I should have stuck with the bullish bias instead of trying to say that there's an inverse and all that other stuff, because I didn't. To be honest, I have barely back tested that strategy. I've only back tested this strategy from day in, day out, and this shows me that it works every time. So with that being said, that is NASDAQ, and that's how I should have played it. So just stick to what works, you know. Don't try to complicate it or do too much. Once again, yes, it's bullish, so we're gonna stick with the bullish bias. And there's also a fair value gap within ES right here. Same thing on NASDAQ. Let me go to the 15-minute time frame, see if we see any liquidity. No, I do not, but I see more of an exact fair value gap right here. And then when price taps into this fair value gap, I'm going on the 5-minute chart because I want to have more confirmation. Right here is a break of structure to the upside. There is a fair value gap, but the fair value gap gets completely disrespected, so I would like to see a better formation of candles. There's another breakup structure right here, price break structure to the upside. There's another fair value gap, it gets disrespected again. So therefore, it's letting me know that, hey, probably don't trade. And then I'm just waiting for another breakup structure to the upside. I don't see it, I don't see it, I don't see it until here. I get a breakup structure to the upside. You know me and my entry. Stop loss at that candle low. Entry is the order block. And where's my take profit? And then from my entry to the first take profit, I would do the 0.5 mark, and 0.5 mark is right there. That is 17%, and the second take profit is 32%, which is honestly amazing. I should have just stuck with the bullish bias. I don't know why. I was trying to do something different, do something new that I haven't tried, and yeah, so I'm gonna just stick with what works, and that's what it is. But as you guys can see, that's how I could have won instead of taking those 3 losses. But we learn from our mistakes. Now I know not to do that again. Just stick with what works. And it shows me that it worked. You know what I'm saying? Like, if anything, this just proves that my strategy actually works, because the one time I went against it, I lost. Anyways, subscribe, tune in for more wins, and see how I trade, and comment down below what you guys want me to show you guys and teach you guys or do. And yeah, amen. Amen. Bro, y'all have a good one. I'm out.